Let's go, folks. Good morning. First one of the year. Welcome to the Street's opening bell here from Post 35 on the floor of the New York Stock Exchange. My computer's in the shot. Look at that. I'm going to try and move it out of the way a little bit so you don't get distracted by my Captain America sticker. We are here on Post 35 on the floor of the NYSE. Today is Tuesday, January 3rd, 2023. It'll take me a while to get used to saying that. I'm JD Durkin, as you see there from the blue box in the screen. The first show of the year, opening bell rung moments ago here by General Gary Brito from the U.S. Training and Doctrine Command. An incredible morning here on the floor, celebrating the U.S. Armed Forces' first ever joint enlistment ceremony. We had a stirring rendition of the national anthem a short time ago, Chant of USA, as these young men and women are now officially members of the armed forces. An incredible day here as well. I'm going to go off prompter for something that has been top of mind and top of heart for me since last night. Obviously, this is not a sports show that you do, but if you've been watching the broadcast for quite some time, from time to time, we do talk about NFL football. And if you're like me, you undoubtedly were shaken to your core last night by what happened with Damar Hamlin of the Buffalo Bills on Monday Night Football in cardiac arrest. And we send our absolute best to Hamlin, his family, and everyone there at the Bills. And the one note that I bring up about this is that if you are otherwise unfamiliar, this remarkable young man has launched what's called the Chasing M's Foundation Community Toy Drive for a community in McKees Rocks, Pennsylvania. Hamlin's goal was to raise during the holiday season $2,500. And as of right now, more than $3.5 million have been raised. And so I encourage you to go to that official page for GoFundMe and consider donating as we continue and await and send our very best and await word for what happens there. Went to bed with a heavy heart, having watched the game like I do every Monday night. Woke up with a heavy heart. It's been the top thing that I've been focused on, and you may very well be like me. So we'll continue to bring you updates there about as these incredible donations continue to pour in. All right, now we turn our attention to what we're here to talk about, and that is stocks in the market and what it means for you. Stocks were up in pre-market this morning as investors look to kick off 2023 on a high note. It comes after the major averages notched their worst year since 2008, ending a 3-year win streak on Wall Street. This week, investors are looking ahead to new economic data. We love to talk new data. That data includes manufacturing figures and the JOLTS report tomorrow, plus, of course, the December jobs report out this Friday morning at 8:30 as fears of recession continue to shake sentiment. Let's now take a look for what is on tap for this morning's broadcast. We will talk the year ahead as Wall Street kicks off a new year of trading, plus warnings from the IMF. That week of economic data will tell you all the things you should know, and Tesla missing the delivery mark. Of course, we're going to talk Tesla. For those stories and so much more, we now welcome in our Action Alerts Plus co-portfolio manager, Chris Versace. Chris, welcome. I hope your holiday season wrapped up well, and a happy new year. I hope you got to celebrate with loved ones. You were doing some wing challenge, if I'm not mistaken. I hope that went well. I do want to get your take here on stocks kicking off the new year on a high note, indicative of what's to come, I wonder?
We'll see, JD, and I hope you had a happy New Year's as well as did all the viewers. It's always, the first day of trading is always kind of interesting, right? In some respects, we roll back the clocks, if you will, the performance indicators for the various market indicators starting at 0.0%. But as we think about the drivers of the market, we have to ask ourselves, has that much really changed from 3-4 days ago? And I think the answer there is no. So it's more of a psychological start. And I think the data that we get this week, including some of the data we got this morning out of China, Taiwan, the Eurozone yesterday, the UK today, all of that data is going to help people refresh their expectations for what's ahead in 2023. And I'd remind the viewers, today is the first of only 250 trading days. We have a long way to go. A lot to get through until we close the books on 2023. I suspect we're going to see, just like we did last year, a number of twists, a number of turns. And at least right now, as we start the year off, I'm a little concerned about the December quarter earnings season that's going to begin in earnest the week of January 16th. But we've got a lot to cover before we get there. And what it says will most likely sharpen our expectations for that 4 or 5 week that'll be rapid fire earnings.
I wonder, did you and Bob count out 250 trading days? Did you go through the calendar and count them all out, or you just know that that's the number?
We have a lot of tools at our disposal at AAP. One of them is called Google, and I suggest people use it.
I'm a bit unfamiliar. I'm not I know Alphabet.
It's real
I don't know
simple.
Google.
It's
So
real simple.
we'll take a look.
Hey Google,
Yeah.
how
Is
many
it kind of
trading
like
days
Bing?
are there in 2023?
Yeah. It sounds like Bing. That's what I use. We got a big week and a month on tap here. Let's dig into a little bit more of the economic data that we could get here in the next few days. You and I talked last week about Wednesday being a big day, manufacturing data. We'll get the JOLTS report. We also get the ADP numbers, which give us a little bit of a precursor to Friday. And of course, Friday itself, the big jobs numbers at 8:30 from the Bureau of Labor Statistics. Am I missing anything here for the next few days?
No, well, from an economic data perspective, no, I think you're right. Wednesday and Friday are going to be the big days. Thursday, though, we actually have a little pop in earnings reports coming from a number of different companies, including Schnitzer Steel, Bed Bath & Beyond, ConAgra. That's also the day that we kick off CES 2023, the largest trade show and one that is focused on technology. And I think there is a pretty good chance that rather than being hey, here's some cool new technologies in the next few years, and here's some must-own products you're going to see on the shelves later this year, CES 2023 could be far more, and I don't use this word lightly, sobering. We're getting a lot of reports about order cuts from chip companies. It'll be interesting to hear what they have to say during all the keynotes during CES 2023.
Yes, the keynotes. How will this data, actually, let me phrase it this way. What's the most important piece of data this week you think the Fed will take into consideration as we inch closer to the February meeting? Is it the jobs number Friday?
I don't think it's going to be the jobs number Friday. I don't think the Fed will be focused as much as we will be on the PMI data either. For the Fed, it's really going to be the wage data. When Fed Chair Powell spoke last time, he was very, very zeroed in on wage pressure, and he was really talking about the various inflationary pressures that we've had to endure in 2022. But there seems to have been kind of a sea change, if you will, where early in the year, as a result of the Russia-Ukraine war, it was commodity pressures, food pressures. And then as we got into the back half of the year, the labor market remained very tight. And even though we saw some relief on those pressures, wage pressures were the key focus. And I think that is going to focus us, as well as the Fed watchers, and anybody who's watching the CME Fed Watch tool, the Atlanta Fed GDP the Atlanta Fed GDP Now model, and other economic indicators. That's going to be the report, the wage data contained in the December employment report. That's the one, JD.
Do you have a favorite regional Fed?
So
yeah, I know you were not expecting that question.
No, I was not. And to be truthful, in the past, the economic indicator for GDP that I really relied on the most was the New York Fed, but they discontinued it. And while I refer, and a lot of people refer to the Atlanta Fed's GDP Now model, believe it or not, that model tends to be off. Either they're too positive, which is where I think they are now. I think the last reading for the December quarter was positive 3.4%, something like that. But they also tend to overestimate on the downside as well when they get it wrong. So the other Fed that I really, really like is they put out a great economic PowerPoint is the Richmond Fed.
Oh, okay, nice. That's a good answer. Because I like that there's individual or more prominent data points that come out of the regional ones, which are important to follow. Obviously, we follow Chair Powell, and we will for quite some time. Okay, I want to ask you about this because I know you'd written about this a bit. The managing director at the IMF has said she expects the global economy to face a more difficult year coming up, perhaps than the one we are leaving behind. What should we know, Chris, about projections for global GDP, according to the IMF, for 2023?
So let me first come out swinging with a real sarcastic comment. Wow, she really swung for the faces with that remark, didn't she, after all the contracting PMI data that we've seen in the last several months? Shocker. It just kind of reiterates that, the IMF is always a beat or two behind. A lot of those agencies, including the OECD, tend to be that way. So I think it more of they are putting their stamp on it as we enter 2023. Clearly, a recession is a top of mind for a lot of folks out there. We chatted about it last week. I think given the data that we've seen in contraction territory, again today for China, Taiwan, the Eurozone yesterday, the UK, and these others, we are going to see a continued slowdown in the economy. The big question to me is, if we do get a recession, how deep, how long? No different than what you and I talked about last week. But for folks that are like leaning in on what the IMF has to say, I wouldn't do it. I would pay more attention to the new order data that we're going to get this week. That'll tell us how January is going to shape up. And you want to be forward looking in this as you assess the impact of the economy, as well as earnings expectations, not that beat behind like the IMF is.
Chris, obviously we've heard from CEOs like Jeff Bezos and many others who say it's time to batten down the hatches. If we're not heading for a recession, it's because we're already in one. But I actually thought there were pretty interesting comments made right before the holidays here by Mark Zandi from Moody's, who says, I don't know, I'm paraphrasing here, I don't know necessarily that it's a foregone conclusion we'll have a recession. His argument is that there's all these distortions in the bond market with regard to the inverted yield curve because of the era of quantitative easing, right? So in the Fed's effort to inject all this liquidity, we know they bought all these mortgage-backed securities and all these treasuries from big banks, and that has led to these distortions. So you can't necessarily take the inverted yield curve and read it the same way you would under a normal economic circumstance. I wonder, do you fall in the middle of those two camps where some say, yeah, we're definitely heading for a recession cliff, and others who say, maybe not, maybe there's some distortions in the numbers because we are still climbing out of a once-in-a-lifetime public health crisis?
So I don't think we're going to see a dramatic, plummet in economic activity. But I think we also need to differentiate between what the formal definition of a recession is, what the data tells us, and what it's like on Main Street for the average consumer. We have seen gas prices come down. I tweeted out over the weekend, I filled up one of our cars, I think around $2.62 a gallon, total shocker. So that will help folks feel a little bit better. But remember, too, a lot of these CEOs that you've been referring to announced a number of layoffs or shared, like Goldman Sachs, Amazon, that they are fine-tuning their outlook and expect to announce layoffs, when they said it'd be in the coming weeks. So, in the very near term. And I think that psychological component is going to weigh on consumer spending. We know consumers have continued to ratchet up their debt. They're going to have higher borrowing costs. The question to me is, is the consumer, does he or she have enough firepower like they did in 2022? And the answer is probably no. So, while I don't see a formal recession, perhaps, I think we're going to feel like we're in one no matter what.
Are you of the thinking that investors are pricing this in? Investors are expecting and have sold as if we are heading for a recession?
So that's a complicated question, right? Because you could say, well, look at the market activity, look at the horrible performance in the market the back half of the year. But these 2023 earnings expectations for the S&P 500, last I saw, JD, and this was Friday, they're still calling for 5% EPS growth on a year-over-year basis. That's a big number, and it's really diopposed to the economic data that we've gotten. Again, all that PMI data. And there's a very close correlation between what ISM puts out every month and S&P 500 revenue. So as that ISM data has fallen, it's logical to expect S&P 500 revenue for 2023 to come down, and therefore earnings as well. So I wouldn't be surprised if we've got another leg lower in the market.
And I do actually want to do a quick market check, because now the dust has settled. We are 16 minutes into the new trading day and the new trading year, my friends. The S&P is up 0.4, NASDAQ up 0.9, the Dow is up 0.1. A little bit of green on the board will be a welcome sign by many, even if it's early, in day one of what we now know is 250 trading days, according to Chris and Bob's careful counting. They say it's Google. I'm convinced they went through the calendar and counted up day by day. The big themes of last year, of course, inflation, recession, layoffs. What do you suspect will be some of the big themes of the next 12 months? If it's not those three things I just laid out.
So inflation, recession, what was the third one you rattled off?
Layoffs, or as the companies like to call them, cost-cutting measures.
Right, right-sizing efforts. Yeah. Now, I think those two will be the driver, but I think, in the not to beat a dead horse, but in the very near term, the big theme is going to be the December quarter earnings season and the reset for expectations, again, for the S&P 500. And it's key because that is the market barometer that tells us how the market is priced. We use the S&P 500 price divided by its earnings to get the market PE. I think we talked last week, where were we in 2005, 2006, when the Fed funds rate was approaching, 4.755%. That's where we're likely to be by the time the Fed is done boosting rates in the first half of 2023. I think that market multiple, where the S&P 500 peaked around 17 to 17 and a half times, is going to, start coming to the forefront of investor minds, asking questions about, geez, now that we've got other alternatives with higher interest rates and the economy is slowing and earnings expectations are likely to come down, at least in the near term, what is a fair market multiple? And I think that is going to add to that down leg in the market in the first half of the year, certainly the first few months of the year.
With regards to defining a recession, we've talked before about the dating committee of the NBER. When do you expect to hear, when will we reach the dating committee news cycle, right? Where now it's like, okay, now we got this group of economists and professors, and now they're looking at the data from the last 12 months. We're not really talking about that just yet. But I suspect at some point this year, that's going to be like the top thing we talk about, especially if they come out and they say, oh yeah, actually folks, we did hit a recession. It was 12 months ago. We now know it officially. Then it will be like the top story of the business world, I suspect. But is that something you kind of, yes, Laura? Yeah. Happy New Year, my friend. Just saying hello. Is that something that you expect to happen at some point this year, where we're not really talking about the NBER very much, but we may, and it may be the top thing we talk about for a while?
Well, you raise a good point about a recession. More often than not, we don't know that we've been in a recession until we emerge from it. We tend to get a lot of revisions to the data, especially the GDP data. I believe each quarter is revised, 3 times. And as that gets refined, we'll have a better sense. But again, whether or not we see the technical definition of 2 back-to-back quarters of negative GDP growth, what's a bigger impact is going to be the consumer psychology, the psychographics, if you will. Remember, the consumers, directly and indirectly, 2/3 of the economic engine for the United States. And as the consumer goes, so too will the real economy. I'm not, again, necessarily worried about a bunch of folks sitting around a table in D.C. going, you know what, we were in a recession. And I say that as someone who has to manage the AAP portfolio and is more focused on the evolving forward landscape. That's what we have to pay attention to when managing, the portfolio, or individuals should be managing their own portfolios, picking their individual stocks, ETFs, mutual funds, not some revisionist history that's very rear view.
I don't want to get ahead of the work in the portfolio. I wonder if you're able or willing to give us a brief preview. Are there names that you are a bit more optimistic on for 2023? Not to give away all the goods here, but are there some names that you're kicking off the year that you're willing to share here? And maybe we use this as a tool of incentivizing people watching this broadcast to consider an AAP subscription.
So that's a wonderful question, and I appreciate you asking it. What I would tell you is, as we ended 2022, we were consciously aware of several programs emanating from Washington that were very positive catalysts. Whether it's the Biden infrastructure law, the Build Back Better law, the CHIPS Act that'll really kick in the second half of the year. There are pockets of strength to be had in 2023. The key is really zeroing in on those companies that are best positioned, right, to take advantage of the incremental spend that will emerge, but also understanding too when that's going to happen. If I could give you kind of 3 categories that we've been really zeroing in on, again, with the Biden infrastructure law, A and B here would be, geez, if we're going to be rebuilding roads, bridges, highways, airport runways, and other things like that, what are some of the common things that we're going to need no matter what, whether it's equipment or concrete and aggregates? So those are 2 hints to what we have in the portfolio there. But also tucked inside the infrastructure bill is the build out of the EV charging network. And, even though I know we're going to talk about it in a little bit, but even though Tesla missed expectations for its recent EV numbers. I believe its 2022 numbers, deliveries were up something like 40% year over year. That tells us, just as we talked about last week, more people are buying EVs. We're going to continue to see that push-pull pain point with EV charging demand. So those were a couple of areas, JD.
Well, if folks are hearing that and they say, I want to get in on the action, I want expert analysis and insights into how to best compete with my portfolio, the good news is there's a New Year's sale right now. You can access the AAP portfolio today. If you go to TheStreet.com, you'll see it right at the top. Action Alerts Plus. Don't miss $120 in savings on a year of expert portfolio insights from AAP and your free 2023 Outlook report. Listen, we didn't even have this free pitch worked in, right? This whole thing. But that's how we roll on the show. I'll make sure you guys are taken care of. All right, I do want to ask you about China. New data out of that. Absolutely. New data out of China showed that its factory activity extended declines for the month of December. Restrictions now beginning to loosen the region. That's been a top storyline the last month or so. Chris, do you expect activity to turn around a little bit in January?
I think once we get through this N wave, and as we talked recently, you and I, whether it's January, early February, I think we have to kind of get through that. It does mean that there's going to be some near-term pain as consumers are not necessarily out shopping, right? Reports are that they're kind of holed up, fearful of the virus. I also think this is why the Eurozone is offering to give its vaccine free to China. We'll have to see if they accept or not. But make no mistake, we've seen this previously in other countries that have loosened restrictions. Knock on wood, this is the final N wave, and we'll start to get back to business, back to shopping for consumers in China, reigniting that economy. The bigger question, though, is how vibrant will it be relative to expectations? And is it enough to offset the declines that we're seeing in other markets around the world, given the data that's coming in?
All right, do want to shift our attention over and talk Tesla. That company reported deliveries falling short of analyst expectations. What were some of the biggest headwinds facing Tesla in its last quarter? And are those the same headwinds that the company faced the entire year, which was not a good one for investors specifically?
So I think the biggest two things that that they were impacting them were ongoing supply chain issues. They were a real thorn in the side of all automakers, but they have gotten better throughout the year. One of those in particular were for chips. The interesting thing about it is, given the slowdown that we're seeing in various end markets that use chips, there is now some excess capacity in the market. Perhaps that'll get diverted now more towards auto chips than, say, PC chips or smartphone chips or some other chips that are out there. That could lead to a bounce back a little stronger, quicker than some people might have been thinking this year. But the other side of it, too, for Tesla in particular, is what's been happening in China. We just talked about the worsening economic data there, the impact of this N wave. I think they're going to have to get through that as well. The question, I think, when they report their results for the December quarter will be, what's the guidance for the forward quarter, meaning the current quarter that we're in? That's going to be the make or break. But JD, you and I talked about Tesla, last week or so. I have my reservations about it, given the onslaught of competition coming at it. Perhaps they will continue to be a leader in the EV space, but that competitive landscape is going to tighten. Make no mistake about it.
Absolutely. Now, we've reported that Elon Musk, that is, in case there was any confusion as to who Musk referred to, had a successor in mind for the company. You think we'll ever see a new CEO for the company? And if so, is this the year for it?
So, I joked that it's like, well, what company is Elon focused on today? And he has a kit and caboodle of different companies. But my understanding is that there's some management changes underway at Tesla, where they're bringing a fella in who oversaw the Chinese plants and putting him in charge of a number of U.S. operations. Perhaps this is the heir apparent, but we'll have to see. Again, not really sure which company is Elon's, baby, if you will. He certainly gets the most headlines with Tesla, second probably to Twitter. But we'll have to see.
Tesla, of course, had a rough year with shares down. What did it finish down? About 65%? if not more. Yeah, that's about right. The stock down 69% in 2022, if I'm not mistaken. People are certainly going to be concerned, especially they've been holding on to this name for a long time. Concerns of another plunge this next year, or can they stop the bleeding?
You know, the EV space is a tricky one in general, right? You know, we got this EV tax credit that's coming in starting this month. It's good for 10 years. So I think that's a positive. But again, you know, with a rapidly evolving landscape with so many more players really focusing on the EV space. And I believe over the last couple of days, GM CEO came out and said, "Oh, this is the year we catch Tesla." So I think there's a lot of people that are kind of bracing for this. I don't want to say carnage, but again, this competitive landscape that is significantly different than it's been the last few years. Can Tesla compete? And by compete, I don't mean just shipping cars. And they do so in a profitable manner? As an investor, that's really what we want to see.
All right, I'm ready to move on to our rapid fire section if you are, but first, is there anything else in terms of the overall macro environment? Any good tidings, resolution type thing you want to address while we are on day one of 250?
I'm going to take a cautious, careful approach, JD. Let the data come in. And to that, I'd say I think we've covered the vast majority of what is going to drive the market today.
I like it. All right, on to our rapid fire section then we go. First up, Chris, are you a buyer of tech stocks as we kick off the new year?
No, absolutely not. You know, right before the Christmas holiday, we had Micron really warn about, you know, various end markets, PCs, smartphones, and the like. The Taiwan PMI data for December continued to contract. We're hearing rumblings that AMD, Intel, NVIDIA are cutting orders. Also, I think Nikkei Asia reported that Apple is pushing out orders to its suppliers for a variety of products. If memory serves, that is AirPods, Apple Watches, and MacBooks. So I do think there's some more downside to be had as these, you know, rumblings kind of come through to earnings expectations. So we'll wait on the sidelines, for all this bad news to get through, and then take another look at these names. But for now, we're not touching them.
All right, next up, do you see greater upside for EPS expectations this year than downside?
No, absolutely not. You know, we're more in the camp of downside revisions, especially for the first half of the year. You know, forecasting the full year can be a little tricky. More often than not, the consensus expectations are skewed in a positive manner towards the back half of the year. But we've got to get through this first half of the year, and all the data just says, you know what, we're going to see more downside revisions. So, you know, more downside ahead is my thinking.
More downside ahead, folks. All right, third and final, when it comes to the Fed, what is the key piece of data to be had this week?
Well, you asked me this question earlier, JD, so it's an easy one to repeat. It's going to be wage data, particularly that found in the December employment report. Powell's been talking about, you know, the labor market being tight, and until it loosens up, odds are that wage pressure is going to remain. If we do see that number come in as expected or even hotter than expected, that's going to solidify expectations for the Fed for at least 2 more rate hikes in the first half of 2023, both 25 basis point sizes. If it's demonstrably higher, that wage inflation data, perhaps we could see rumblings of something even stronger.
Chris, I would like to sit here and make the argument as the host of this show that it's such an important question it had to be asked twice, but the reality of it is, I'm going to own up to my mistake. I probably should not have asked you the question earlier. It's just I was so excited to get to it, I did not even necessarily know it was in the rapid fire section. But listen, this is like great minds, right? Because you wanted to talk about it, I wanted to ask it, and in case anyone missed it the first time, a little double dose of
totally agree, JD. It is so important. It is going to be the biggest thing to watch this week. It's worth talking about twice.
I'm off to a great start here in 2023. I'm going off prompter. I'm skipping parts of the show's programming. The good news is we get 249 more of these to do. Chris Versace, thank you, not just for today, but for the last little run of shows. You've done an awesome job stepping in. We've all gotten smarter together. We are back with our colleague Martin Backerdax tomorrow morning for Opening Bell. Chris, thank you for all of this, and you and I get to continue our conversations on behalf of the AAP portfolio later this week with our friend Bob Lang as well. Chris, thank you for everything.
Thank you, JD. Have a great 2023.
You got it, my man. Rock on. All right, folks, that is going to do it for the market open here from the floor of the stock exchange. Stick with the street for more on these and all of the major market stories that matter to you, and we will see you tomorrow.